Bitcoin just crossed $114,000, but don't let that green number fool you. While the price is rising, the volume is falling, and 82% of traders are blindly bullish. Are we heading into a breakout or a brutal trap? In this video, we're breaking down the truth behind the chart, uncovering the real smart money signals, and revealing what most traders are missing. This is not your average price update. This is the data-driven analysis that could save your next trade. Bitcoin is currently trading at $114,930.80, reflecting a moderate increase of 0.68% over the past 24 hours. At first glance, this seems like a healthy upward move, but when we dig into the underlying metrics, a more complex picture begins to emerge. Despite the price ticking up, the 24-hour trading volume has declined by 7.36%, down to $54.52 billion. This drop in trading activity raises an important question. Is this price action driven by real market momentum or just a short-term fluctuation with low conviction? Volume is the fuel behind every strong trend. When volume decreases while price moves up, it can often indicate a lack of strong buyer interest or a temporary move led by fewer market participants. That's something experienced traders always watch closely, especially during periods of uncertainty. Volume to market cap ratio also stands at just 2.42%, which is relatively neutral. Not weak, but not aggressive either. It suggests moderate. Liquidity conditions, and any breakout or breakdown from here will require confirmation from increasing volume. Now, let's talk about Bitcoin's market capitalization. The current market cap sits at $2.28 trillion, marking a 0.69% increase. This figure represents the total value of all circulating Bitcoins, and it's one of the most important indicators of investor confidence. It tells us that despite short-term uncertainty, the broader market still values Bitcoin at a historically strong level, and the long-term trend remains intact. Looking at supply data, we see that Bitcoin is approaching its limit. Out of a maximum possible 21 million coins, about 19.9 million BTC have already been mined and are in circulation. That means we are over 94% into total supply. And with the remaining 6% to be mined slowly over the next century, scarcity is becoming increasingly real. This programmed limit on supply is a core reason behind Bitcoin's long-term bullish narrative. Unlike fiat currencies that can be printed endlessly, Bitcoin's fixed cap gives it an edge as a store of value, especially during inflationary economic conditions. The fully diluted valuation, or FDV, is currently estimated at $241 trillion. This figure assumes all 21 million BTC are in circulation, and it gives investors an idea of the coin's projected total valuation in the long run. When the FDV is close to the actual market cap, it suggests there isn't much inflation risk remaining, another bullish sign for long-term holders. Now let's dive into the chart itself. What we see here is a classic example of short-term price consolidation after a brief rally. Around 115.5K, Bitcoin met resistance. The candlesticks show multiple rejections at that level, forming red candles that indicate sellers stepping in. However, as we move to the right side of the chart, there's a clear shift. The price starts forming green candles again, suggesting that buyers are attempting to regain control. This behavior is typical during a sideways market phase, where both bulls and bears are in equilibrium, waiting for a catalyst to tip the market in one direction. These kinds of setups often lead to breakouts, but the direction of the breakout depends on several confirming factors, such as volume surge, price closing above resistance, or breaking trend lines. Traders should also watch the lower shadow of candles. They often indicate rejection of lower prices and show where the smart money is absorbing liquidity. Now turning to community sentiment, we see a striking figure. 82% of 4.4 million voters are bullish on Bitcoin, while only 18% are bearish. While this appears optimistic on the surface, contrarian traders often get cautious when sentiment becomes too one-sided. In many cases, when retail traders become extremely bullish, Large players take the opposite side, triggering stop hunts or liquidity grabs before the actual move. This is why professional traders always use technical confirmations along with sentiment data, never sentiment alone. On the left side, we also notice that Bitcoin's coin market cap profile score is at 100%. This means that all relevant information, including circulating supply, market data, and tracking sources, are fully verified and reliable. For those who are new to the crypto space, this acts as a trust signal and reduces uncertainty when researching assets. Meanwhile, on the right-hand side of the screen, we see promotional content such as community giveaways and engagement campaigns. While these don't directly impact price, they do show increased user interest and participation in the ecosystem. That often correlates with retail inflow, especially during hype cycles. To wrap it up, Bitcoin is currently at a critical technical and psychological level. The price is testing short-term resistance, but volume is weak, and the market is consolidating. With strong community sentiment, low available supply, and high long-term valuation, Bitcoin remains structurally bullish, but short-term caution is necessary. Any trader or investor should watch for key breakouts, volume surges, and macroeconomic factors that could act as catalysts. If you found this detailed breakdown helpful, make sure to hit the like button and subscribe to Financial Freedom FX. We bring you real-time analysis, smart money insights, and professional chart breakdowns every week. Also, let us know in the comments, are you bullish or bearish on Bitcoin right now? Your voice matters, and we always reply to the most thoughtful comments. See you in the next video.